GM. So, Bitcoin. We know it reclaimed its high time frame SR. As expected, that has led to a continuation rally. Time and time again, I mentioned when Bitcoin reclaims this level, it typically leads to rallies, so expect the same to continue. That's played out beautifully. But now we're also seeing Ethereum reclaim its own pivot level, total 3 as well. However, others, so outside the top 10, still not able to recover. So that's the state of the crypto market. Bitcoin's got all the strength, but Ethereum is now following Bitcoin, showing some of its own strength. Total 3, those major altcoins, they are showing some of their own strength. So overall, good for the industry to see that there is some recovering going on. At least there is some demand. So what have I been saying? Well, whether we get distribution or reaccumulation, the path is higher. Max pain is higher. I'll say it time and time again. Longs have been the play. Who else is calling the market like that? Ever since 107.2K got reclaimed and we stayed above it, bias has been for that reversal, and that's playing out beautifully. So let's see in the coming days and weeks, what do we get? Is it distribution, which can lead to a rally to 120 or higher, or is it building a base for reaccumulation? More on that in the weekly outlook video last night. Make sure to check it out. I go through FOMC, are interest rates cuts bullish or bearish? I go through Bitcoin versus gold. So are people selling gold to buy Bitcoin? Go through equities, new all-time highs, is signaling risk on, and much, much more. A huge deep dive into the market on those higher time frames, zooming out. So that's a banger. That was posted last night. Make sure you check it out. Also a trade of the week in there, which you don't want to miss. But back to the daily levels. Looking at BTC here, bouncing from this accumulation zone that I've been mentioning. Previously distribution, turned into accumulation. Although support has been choppy, that's led to this nice rally. And while we're holding it, yes, the bull market is not back on, but we're also not bearish. We are just in a consolidating market. It's mean reversion, it's chop. That's why it's been a day traders and scalpers paradise. Unless you caught that range low move that we caught off trade of the week at 107, it's not been great for multi-day, multi-week holds because it's been very choppy. Although this is 4 green 3-day candles in a row, we know it's been much difficult than that to trade, because when you zoom into lower time frames, you see these big nasty candles that pump up, retrace it all, then we come back up, and overall a lot of flip-flop, a lot of mean reversion, which some traders get chopped up in if they don't understand mean reversion trading. But what are we doing now? We're heading up into an area where sellers have been happy to sell here. This is the top half of the range. If the bull market is going to be back on, as I said, you're going to start seeing closes above here. If the bear market is going to start, then you're going to see closes below here. It's as simple as that. So that's the higher time frame view. Quick recap to extend from last night's video. Also mapped out these paths last night. So most bullish thing is to see reaccumulation. Price goes sideways, build higher lows, allow positions to actually recover and rebuild, as that sets up a base for higher. That's the most bullish example. But of course, what's more likely to be distribution is just straight up from here, an absolute squeeze, which leaves everyone sidelined and gets retail FOMOing in at the top. That generates exit liquidity and can lead to your setups, and that's going to decide whether we get distribution or reaccumulation. So keeping an eye on this heavily. But that aside, what are we looking at here? Because we got clear levels. Look, Q4 open, holding beautifully. That's where we closed yesterday at. Finding support there, and we're heading back up into this daily gap. Now the daily gap was over here, started to fill in some, moved up to here, immediately found resistance there yesterday as we pushed up into it. But if we can start moving up and getting some closes in this daily gap, I think that then sets up continuation higher to 119.6 to 120K. And we have, of course, got a big day tomorrow. Interest rates How's the market going to react to that? That's going to be very interesting to see. Right now, we're rallying pre-FOMC, holding that Q4 open. As I've said, nothing good happens below the Q4 open, but while we're above it, can we now start to make some moves higher? And I think if we get above yesterday's high, there's a real shot at hitting this gap and starting to trade through to 119.6K in a quick fashion. Now, is that really what you want to see? I'm not sure. I mean, maybe if we rally up to here and then form a higher low, that could be okay. But again, for higher time frame reaccumulation, you want to see price go sideways, build a base. Distribution, it's just going to go straight up and then go down just as quick. Just like this, you go straight up and then down just as quick. But that can offer some amazing trades for us, as you guys know. So zooming into the lower time frames on these levels that we've been trading for weeks now, since we retested that range low, we've literally just closed above high time frame SR. Led to continuation higher. Initially rejected the 112K pivot. Nice short setup there. Closed through it. Led to higher. Initially rejected the Q4 open, but consolidated. Positions rebuilt on lower time frames. Closed above. Led to continuation higher. It's so simple, guys. And I've had this level marked out here as that 116K liquidity level. That's where we took profits on the other day. You will see over here. Flipped the Q4 open, got along on the M15, took profits right at what has been the top there, that 116K target. So that's the next level to flip. Get above there, flip it, then I think you're looking to start filling in this gap. And that can happen pretty quickly. So that's what I'd be watching. Again, you're waiting for that strong close above on something like the 4-hour. Because, again, you can get these rejections at these keys levels. That's why they're pivot levels. You trade both long and short around them. If you break above cleanly, you trade continuation. If you reject it, you trade the reversal. Super simple. And even this, you lose the Q4 open, but as soon as you reclaim it, boom, continuation higher. So it's been level by level trading. That's been working out beautifully. And now we need to see, can we flip 116K? Or do we just go for another sweep and reversal and just have a classic pre-FOMC chop? That's going to be interesting. And that's what I'll be looking at in terms of trading levels today and potentially even tomorrow. So play it level by level. This is the market we're in. Right now we're rallying off the Q4 open, but let's see what happens around 116K. Can we flip it instead of rejecting it as we have been? If so, you're looking at this daily gap, this inefficient price action where order books were thin and potentially price can then trade through that pretty quickly. But reject it, as I said, then you're looking at a reversal setup as you have in all of these red arrows over here. So very simple, level by level, play the markets. And this is how I've been playing it. So mentioned in the video on Saturday morning markets, looking for some sort of short setup. I don't trade V reversals. However, if you do get that failure to return or a sweep, that's when I said I'd be looking to trade it. And I was looking to trade it to that liquidity to Q4 open area. And if we reclaim the liquidity, reclaim that Q4 open, I was looking for longs. That was posted a day ago now. And boom, managed to get a short setup here. So this was what? A beautiful failure to return pattern where you get a high, rejects the key pivot level at 116K liquidity. You then have a lower high, big red engulfing candle. That was my trigger to short, playing it originally to the liquidity, but I saw price was weak. So I actually took profits at that Q4 open. We then tried to reclaim the liquidity. I got stopped out trying to take a long initially there, but got long again here when we reclaimed it for the second time. So again, guys, sometimes you have to lose a trade to win a trade. You're never going to have a 100% win rate, but we reclaimed that liquidity, retested it, and on that green hammer candle, that was a signal for me on the lower time frames to say, okay, I can get long for, again, this idea that I shared the other day. These were the two setups. These are the day trades I've been taking. So I'm looking to take profits here pretty quickly. If I'm looking at the volume profile of this consolidation here, the value area high is right around this level at 115.6k. So I'm just going to get out for a 2R, which may even hit while recording this video. That's enough for me. That's a pretty good set of day trades within a tight consolidation. So I'm going to take that and run with it. And again, if we can flip that 116k liquidity, then I'll just look for new setups. Super simple. Traders market right now. You have to know how to trade. You have to have your systems already in place, and then you just take your system rules. And as you guys know, we've been killing it last couple of weeks. Mean reversion environments tend to favor a lot of my systems, and that's allowed me to generate a lot of returns while price has been super choppy and not favorable for high time frame traders. And that's the beauty of trading, because then you compound these profits into longer term bags, you stack the chips, and that's how you then generate generational wealth. But that's another topic. That's another video for another day. Let's hide these for now. Let's look at these levels, low time frame for the day trading setup. So what are we seeing? Well, obviously we're rallying off the New York Open right now, which has just begun. Nice volume in there. So potentially you're seeing ETFs bidding. But I think if we break below the Q4 Open, this was the impulse candle gap I mentioned here. Can drop that for now. Then we're probably heading towards either this 112k pivot and we just hold these gaps over here, or this beautiful weekend liquidity that we set around this 110k. So I think high risk reward longs really come from lower, unless we can flip 116k. But if we reject 116k, then you get high risk reward shorts potentially setting up again into some of these zones which are untested and have been producing really nice rallies, but no doubt longs have been building up. And this is the trade of the week from Weekly Outlook video. I'm looking for higher time frame setups this week, maybe next week, I'm not sure, where could I get short if we have a move to the value area high, ideally very quickly and inefficiently. If so, we get above it and then we get below it. That would be a trigger for me to get short with an invalidation at the high. Alternatively, if we can pull back, form a nice higher low, then I'll be looking for a long on any loss and reclaim of the value area low. So that's at 110.6 and 119.4k. This is the buying and selling that's been done over the last 4 months in this range where we've pretty much gone sideways. So between the value area low and high shows you where 70% of the buying and selling's been done, which is very useful, right? That literally tells you where the majority of demand and supply has been. So that's why I want to trade around these high risk reward levels for swing trades. This is of course excluding day trades and scalps for my multi-day, multi-week holds. That's what I'd be looking at. That's where I think the high risk reward areas are. So 115, you're right in the middle of the range. Don't diddle in the middle, especially as a higher time frame trader or swing trader. You've got no edge here. You need to wait for one of the extremes to form. Otherwise, it's just day trades, as I've been mentioning. So GM, I think that TP is almost hit, but let's move on. Let's take a look at the order flow. So on Bitcoin, what are we seeing? Well, you've got this gap over here that I mentioned. You also have a gap below, and it's really yet to be seen which gap's going to fill in first. So are we going to actually start to flip that 116k level and trade into this big daily gap up to 119.6k? If so, got to flip and hold it, not reject it immediately like we did previously. And below the Q4 open now, since we've already set the trap below it, I think if you lose the Q4 open again, that's what then sets for a downtrend to fill in this gap to at least 112k. If not, as I said, some of that weekend liquidity around 110. So that's what I'd be looking at in terms of trades on the long side, on any downside. But flip 116k, then you're also looking at continuation, reject it, then potentially you get an extension of this short path where I'd be looking for potential setups to ride the momentum down. So which gap fills in first? That's the question. Is it the upper gap or is it the lower gap? And from there, that will dictate the trading setups. But you're seeing spot CVD is leading this push right now, so very good. You want to see spot leading because that's the underlying demand for actual Bitcoin, the real supply. Perps, are actually down. So there was some shorts building up in this consolidation. So I actually wouldn't be surprised if we can break and flip 116K, especially if that spot bid continues today. If we got that momentum, there's enough perps who shorted during this consolidation that can fuel a rally higher. And let's actually check the Coinbase chart since we're recording during the New York Open today. Special one, a little bit later, because I wanted to let the weekly outlook video just breathe a little bit. But what are we seeing? Let's look at the volume. You guys will know by now that Coinbase is where the ETFs do the majority of their buying and selling on behalf of BlackRock, Fidelity, or whoever the issuer is. So when we see these volumes ramp up, that kind of tells us what the ETFs are doing right now. And look at that. Volumes going higher and higher and higher. This is beautiful right now. This is what you want to see for momentum higher. So yeah, I think if this can continue, then we have some potential momentum. And now you just want to watch these candles. Watch something like the 15-minute. New York Open has, of course, begun. So I'd be watching this box very carefully between these two high volume candles that kicked off the session. And I think this dictates where price goes from here in the rest of the session and potentially even tomorrow. So as long as you hold that zone, I think bias for higher, lose that zone, bias for lower. That's how I'd be looking at this market, lower time frames, now that the ETFs are here. And really, you just want to see volume increasing as price rises higher and higher and higher. You don't want to see this just retrace quickly. So that's why I've drawn this box here. You lose that box, you're looking at downside. All of that volume, that pushing from the ETFs has therefore failed. That's bearish. Whereas if it holds as support on any dips, then that volume from the ETFs is actually in harmony and it's finding demand. That's bullish. So yeah, very nice start to the New York session. Volumes carrying this higher. Exactly what you would want to see. Let's see if that can continue. So that is Bitcoin. Let's take a look at Ethereum quickly, because we're seeing some reclaims. There is at least a little bit to write home about when it comes to Ethereum. So trying to flip these daily 12 and 21 bands green, that would be the first sign that ETH may be setting up for good longs. Of course, flipping and holding this high time frame SR level pretty beautifully. Go to something like the 4 hour, you'll see that quite clearly. Look at these levels playing out just perfectly. I mean, I've mapped out these levels for so long now, and look how well they play out on the rejections, on the flips. You just see that there really is demand around these horizontal levels, and horizontal levels super are king over anything, over your rainbow charts, your waves, all of that predictive stuff. It's just nonsense when you look at these horizontal levels, because horizontal levels is where you actually buy. You can't buy diagonally on the order book, right? You set an order at a price which is horizontal. That's why they work so well. It's not magic. And we're flipping and holding this. So if this can hold above the high time frame SR, I think bias is for higher. And the target ETH once, as I mentioned, is this liquidity over here. So I actually mentioned this in that morning markets video the other day. If ETH pulls back to the high time frame SR, look for it to hit this liquidity level. Let me see if I can find that quickly. Remember, I looked at ETH over here. Yeah, bang. Look at that. Guys, please drop a subscribe. Send me to 400. I don't deserve 390 with the amount of crap that's on YouTube with these guys with millions of subscribers, tens of thousands of views that aren't even real traders. Literally just shill you crap and shitty projects literally every day. Excuse my French, but look at that. Told you. Watch for ETH to pull back to the high time frame SR. As there were signs of exhaustion, it moved up inefficiently. And if so, if that holds, can lead to a move to this liquidity level over here. And you're seeing that already starting to play out over here. Hold that level, biases for higher. Lose that level, of course. Got to keep it objective. Then you're looking at filling in some of these gaps over here. So that's the setup when it comes to Ethereum. Not as strong as Bitcoin, but what you want to look at is ETH Bitcoin. So very quickly, has this chart flipped bullish yet on the daily? You know that's my trigger. That's what I've been mentioning. So watching my bands over here, guys, you can drop me a Telegram message. Be happy to share these indicators with you. It's linked in the video at the top. And if you got any questions, feel free to reach out for me. I want to help as many of you as possible. Same way I learn from other people in the market, so I want to give back. But ETH Bitcoin, as soon as these bands flip green, that's my bias to look for ETH longs over Bitcoin. Right now, they're still red. So while the setups and paths are playing out nicely, Bitcoin is still favorable on the longs. So that's Ethereum. Now looking at the stock market, what are we seeing? Well, boom, closed above the 1.2 level. This is what I mentioned yesterday. Close above the 1.2 and hold it. That leads to continuation higher. And well, we're marking up right now as we start the New York session off. And now you just need to see it remain above this 1.2 on any pullback. So very simple. When you're trading, breakouts above these Fibonacci levels, hold the 1.2, leads to continuation higher. If we need to go for a deeper dip, then you need to hold the 1. That then sets up a different path for continuation higher. Start losing the 1, then you're looking at back into range where you need to then find some potential higher time frame support. So while you're breaking out into price discovery, fib levels is all you literally can use. So broken out above the 1.2, can we hold it as support? If not, look at the 1. But continuation bias for higher. Stocks are rallying into the potential rate cut tomorrow, which is pretty much almost guaranteed. So gold, mentioned, if it breaks down below this weekly candle, you're looking at continuation lower, and that's exactly what's happened. So you go to something like the weekly, very simple. Do these weekly bands hold as they have been for years now, or do we actually lose them and go into some form of downtrend? Because that's how you play it as a trend trader. Look at these daily bands. They held. Now they're not holding, leads to downtrend. Very simple. Disrespect. You need to look at what's being respected, and the next bands is really that weekly EMA band. So that's the full market update, guys. If you enjoyed the video, value this content, let me know in the comments. Drop a like, drop a subscribe, and as always, need mentorship, drop me a Telegram message. Happy to help all of you, as I want this community to be the best in the markets, no matter how big or small we are. So GM.